Ever seen an earnings report just tank a stock? Well, today we're digging into AstroNova. Their recent announcement sent the share price into a nosedive, and we're going to figure out exactly why. We'll break down what went wrong, what the new CEO is planning to do about it, and, what it all means for the company's future. Let's get right into it. And wow, the market reaction was swift and brutal. In just a couple of hours, the stock was down over 10%. I mean, that one number really tells you the whole story of how investors felt, and it perfectly sets the stage for everything we're about to unpack. And it wasn't just Wall Street that was unhappy. The company's own new CEO, Jorik Ittmann, kicked off the earnings call with a single, blunt word to describe the quarter: disappointing. When the person in charge is that direct, the numbers are going to be pretty rough. So what exactly triggered all this panic? It's this number right here. The company's total revenue, all the money they brought in, dropped by almost 11% compared to the same time last year. A miss of this size, well, it suggests the problems are a lot deeper than just a single bad quarter. Okay, so where did this weakness really come from? To get that, we've got to pop the hood and look at the company's two main businesses. So when you look at this chart, you can see the problem wasn't just in one spot. Their product ID business saw revenues fall, but look at Aerospace. It plunged over 15%. Now, management did say that last year's numbers were unusually strong, which makes this year's comparison look even worse. But the bottom line is pretty clear. Both of the company's main engines were sputtering at the exact same time. And, when revenue falls like that, it just drags everything else down with it. Gross margin, that's basically how much profit they make on the stuff they sell, it shrank a lot. The company actually swung to an operating loss, which means their day-to-day business cost more money than it brought in. And maybe the real kicker here is that future orders, what they call bookings, were flat. That doesn't exactly scream quick recovery. Okay, so faced with this tidal wave of bad news, the new CEO didn't waste any time. He immediately laid out his game plan. And this wasn't just about patching a few holes. It was a full-on strategic reset for the entire company. So the new CEO's plan is really a four-part attack. It kicks off with shaking up the sales team to stop bleeding customers. Next up, it's all about making sure their new products are actually what people want to buy. Then they have to fix their own production lines so they can actually build the stuff they do manage to sell. And kind of underpinning all of that is a promise for a new culture of accountability. It's a massive to-do list, touching pretty much every single part of the business. When you boil it all down, this whole turnaround strategy really hinges on one thing: a product refresh. The company is basically betting the farm on a whole lineup of new, high-tech printers. But here's the catch: selling brand new, expensive equipment takes time. The big question is whether customers are going to buy into this new tech before the company's clock runs out. So that's the plan, but what is the company actually telling Wall Street to expect for the rest of the year? Well, their forecast, their guidance, tells us a lot about the hurdles that are still ahead. And man, this chart just says it all, doesn't it? Management took their old forecast for the year and just slashed it. By doing this, they're sending a really clear message to investors. Do not expect a quick fix. The profits are not snapping back anytime soon. But kind of buried in the report was another huge red flag. The company actually broke a key rule in their loan agreement with their bank. Basically, their profits fell so low that the bank got nervous. Now, the bank gave them a temporary pass, but AstroNova now has just 60 days to get a whole new loan. This puts them under some serious financial pressure right when they can least afford it. So you've got operational problems, a lowered forecast, and a ton of pressure from the bank. What happens next? Let's break down the one big question that's hanging over this whole company. It really does all come down to this. Can the new CEO pull off an incredibly complicated turnaround while he's also scrambling to secure a new loan? Trying to fix the business and keep the bankers happy at the same time? Well, that's going to be the ultimate test for this new leadership team. So you can really think about two different futures for AstroNova here. The optimistic version, the bull case, is that these new products are a smash hit and a new loan gets signed, which takes all that financial pressure off the table. But the pessimistic story, the bear case, is that the turnaround just drags on. Sales are slow to ramp up, and investors just stay on the sidelines until they see some cold, hard proof that things are actually getting better. And this is exactly why we're cautious. Even if the plan sounds good on paper, the execution risk right now is just too high. When you combine the challenge of a major turnaround with that intense financial pressure, it leads us to believe the stock will likely underperform. In other words, do worse than the overall market, until the company can show some real, tangible progress. So how might an investor play this situation? Let's walk through one possible trade idea just to understand the strategy. And remember, this is purely for educational purposes. One idea would be to short the stock, which is basically a bet that the price will fall even further. The logic is simple. Turnarounds take time, and right now sentiment is just overwhelmingly negative. Any piece of bad news, like a delay in getting that new loan, could easily push the stock lower. Of course, there is a big risk. If the company somehow scores a great new loan deal or announces a massive customer order out of the blue, the stock could shoot right back up, and that bet would backfire big time. So there you have it. That's the story of AstroNova's very tough quarter and the challenging road ahead. And as always, this analysis is for informational purposes only. This is not financial advice.